Oh, spaghetti-o. Alibaba's down a little bit today. Why? Because they had earnings. There was a revenue miss. Uh-oh, a revenue miss. Better sell. Now, it's funny. I'm reading this article about all the spin-offs they're going to do and how the intention of them is to reignite what they called anemic revenue growth. Yeah, guys, Alibaba, their revenue growth, anemic. Basically because it slowed from like 30, 40, 50% down to like 18, 19, 20%-ish, right? I think that's kind of silly, but hey, yeah, it's anemic growth, guys. It's anemic. Silly stuff. Now, Alibaba, my cost basis is something like $79, and this is sort of my bet on China. Okay, the per capita GDP is $12,500 US dollars. American per capita GDP is $70,248. Now, as China continues to grow economically and its middle class continues to expand, and that number of theirs, that 12,500 number, gets closer to this US number, they'll have a lot more money to spend on things like ordering stuff off of Alibaba, and using the various products and services offered by Alibaba and its various divisions that may or may not all be spun off by time that all comes to fruition. So when it comes to valuing Alibaba, the ADR shares are essentially kind of a derivative product. They're basically a right to the cash flow of the business more so than a piece of the whole company. So like I've heard it said that it's basically you have a right to your piece of the cash flow but not to the assets. I'm not really an expert on that. So, but with that in mind, I guess I'm not going to add the tangible book value to my assessment of a free cash flow, discounted free cash flow model valuation. That being said, when you take their most recent annual result of free cash flow per share, apply a 12.5% discount rate, and knock the growth down from the big fat double-digit growth rates they've been having in excess of, whether it be 19, 20%, all the way up to 30, 40, 50% in previous years. Knock it down to 9%, okay? Give it credit for that, because this is way lower than what it's done historically, okay? And as it gets bigger, it will get slower, all right? That's, generally true of any business. At scale, the more and more they scale, the harder and harder it is to grow even further beyond that. All right. Even still, you come up with a fair value of $117 per share if you assume a lower growth rate over the next 10 years than they've had over the previous 10 years, by the way. The average has been 30% free cash flow growth, okay? Now, there was a decline in the most recent year, which brought down the 5-year average quite a lot. But in general, growth has been the story of this company, and I think at some point they will get back to growth. It just may not be at those beefy 30% average rates as it was before. So some people would probably say this 9% is too conservative, okay? And the 12.5% discount rate is because, hey, I want a little more juice for my squeeze because, Alibaba has, geopolitical risk, and, there is also the risk that, hey, the growth might be even worse than what I'm projecting it to be. And so I want to say, hey, if I'm taking a chance on this thing, I would want at least a 12.5% return, because I could invest in an index fund and get like 9 or 10%. Give daddy a little bit of extra, a little bit of piece of the action. You know what I mean? So that's where I come up with that. And even still, with that, the stock is substantially undervalued, and you would still have over a 25% margin of safety at today's prices. Now, my average is even below today's price, so I'm a pretty happy camper when it comes to being an Alibaba shareholder, and I have a very substantial margin of safety and a lot of room for error with my entry point into the stock. And that's the whole reason that, I tend to beat up stocks a little bit and go a little bit conservative and wait for low prices compared to what some other people go for. Because Alibaba is a great business, and I think buying great businesses when they're temporarily underpriced is the best way to get a return that exceeds that of the overall market in the long run. If you have shares of Alibaba, why don't you let me know in the comments below. Subscribe to the channel if you enjoy this value-based approach to investing, and make sure that you like, and I'm going to link the Discord in the description. Hop in there. We have a pretty lively discussion on almost a daily basis about this and all other stocks that we discuss on the channel. Take it easy, everyone, and have a wonderful day.